I'm Natalie MacDonald and you're watching Dukascopy TV. Deloitte are back in the studio with us today to discuss their recent report, Trading Up. A look at the current issues facing energy and commodities traders. Jacques de Hillerin is in the studio with me today. Jacques, thank you very much for coming in.
Thanks a lot.
Now, firstly, can you tell our viewers about this report, how it came about, the themes discussed?
The trader roles in energy and commodity trading is changing rapidly. While physical trading has entered a new era of sophistication and scale, many trading houses are expanding control of supply chain by integrating themselves from upstream to downstream. In that context, it looks essential for Deloitte to develop a thought piece in order to analyze the challenges and opportunities for the companies acting in that sector. To prepare our publication called Trading Up, we have leveraged the knowledge of our trading partners of Deloitte around the world and conducted interviews of major trading companies.
The report addresses a lot of the opportunities that are open at the moment to energy and commodity traders, but also some of the hazards. Can you outline some of those hazards for us?
In our views, players in that market will have to adapt in order to face stricter regulation, financing constraint, emergent resource nationalism, and a fierce competition. On the regulatory side, we have seen many regulatory development, either imminent or mooted, which will not only have an impact on the compliance obligation for these companies, but also which could have an impact on the cost of fundings for them.
What strategies are we seeing companies employ, therefore, in order to negate some of these risks?
Regarding financing constraints, for example, some companies have been innovators in self-funded finance through securitization of receivable and inventory, by securing of borrowing-based facility through the pledge of trade receivables and secured inventory. If we took the example of stricter regulation, the most successful organization will be the one who will plan early in order to ensure that they have the process and system in place to capture and report the requested data.
Naturally, these hazards are more present in some of the larger financial hubs, and hence we're seeing investors look for alternative routes. What are some of the regions that are looking to benefit this year?
Global trading activity has gradually been shifting eastward due to the economic rise in Asia and China, which sits in the center of the commodities demand storm. So, underlying changes in the market, both in sources of supply and demand, may lead to the expansion of new commodity centers. But we should never forget that for the choice of allocation, it is all about having the right people with the right expertise. So some locations, such as Geneva, with its master in commodity trading, are taking active steps to develop their talent pool for the trading business in order to remain a major hub for the future.
Jacques, thank you very much for coming in.
Thanks a lot.
That's all we've got time for right now, but we'll be back shortly with more exclusive interviews, so goodbye for now.